Hello everyone and welcome to the channel. Today I'm going to talk about the Ichimoku cloud. I traded using this for, I don't know, maybe about 6 months, a few years back. Um, I wasn't that disciplined, so I had mixed results. I jumped into trades I shouldn't have, didn't stop out when I should have, the typical stuff. But I just wanted, I don't use it now. I did Friday. I made a few trades using it, just to kind of get back into it and test it out, and just wanted to do a video on it. So that's pretty much. I paper traded with it Friday. I think I was 2 for 3. In the end, I was up, I don't know, a couple $100 um, paper trading. So I just want to clarify this wasn't real money. Um, but here's the basis of. I'm not going to go into all the details about what all these are and what they do and how they're arrived at and whatnot. If you're interested in that, you can go research it. I learned Ichimoku Cloud from a guy named Andrew Keene. He used to have a chat room. I was in it. He really liked it. He said he spent 2 years in Japan learning it. And it does have it works good in trending markets. It's not good in choppy markets. Um, there are several ways to trade it. I actually have a DVD on some setups for it, but let's find a good. You know what? Let's look at Apple. Let's go back to here. This was a nice trending day. In fact, this was Friday. This is when I did trade it. I traded Apple right at the open. When your green line crosses above your purple line, and these lines are called, let me see, I know I don't remember them. Tenkan line, Cajun line, and Chiku line. Now the Chiku line I have turned off. I don't use that. You can see this orangish line. I don't use that. I don't really see much value in it. It doesn't, to me, I don't see much support resistance with it. I don't know. I don't really. It's just extra stuff that doesn't need to be there, so I get rid of it. Everything else I leave default. I don't change anything else. I may change colors. I may have changed. In fact, I may have changed colors on these. I don't remember. But when your green line crosses, here's the thing. When the price is above this cloud, this is the Ichimoku cloud here. These moving average lines are derived from formulas taken. It's a pretty complex thing. So, like I said, I'm not going to get into that. But when price is above the cloud, it's a bullish market. When the price is below the cloud, it's bearish. It's better. It's possible to have a red. Obviously, possible to have a red cloud, but it's possible to have a red cloud with the price above it, which you can probably see right here. Red cloud, the price is above it. When the cloud is red with the price above it, it's kind of a mixed signal. It's not as strong of a cloud. This whole entire cloud offers support. Instead of a support line, it's a support area. So anytime the price is above a red cloud, it's not quite as strong as it is when the price is above a green cloud, or whatever color you want to call that. So let's go back to Friday. I bought calls right at the open for a couple reasons. One, we were trading right at the pre-market highs. We popped above pre-market highs, popped out of the top of the cloud, and the green line crossed the purple line, which is a bullish signal. You ride this out. You can sell some along the way. It's probably not a bad idea to sell along the way. But the general rule is when you enter under this premise of the green crossing above the red, you sell when price closes back below the purple. Like, I know I just called this red, but it's purple. You sell when it crosses. Now there's different ways you can go about it. You can come up here and maybe sell a little bit when it closes below the green, maybe close out of it when it closes below the purple. or maybe sell some here, and close when it comes down and comes into the cloud. It's really up to you how you want to play that. The way I traded it Friday, if I remember right, I sold some along the way up here, and then I closed out of it right here. Um, but I don't remember what the percentages were. This is my paper trade account, so I'll go back in. I'll show you what it was. In fact, I don't even think I closed out of it then at that time. Remember, this is my paper trade account, so this is all fictitious numbers. 12:27. I bought Apple at 9:36 in the morning. I sold two of them at 9:38 and one of them at 9:40. So 9:36 would have been right at the open of this candle. Sold some at 9:38. Sold the rest at 9:40. I couldn't tell. I can't tell you right now why I sold this soon. Not real sure why, but anyway, you see, this would have been obviously been a really good day to ride this all the way out. You know what? This wasn't Friday. This was the 26th. That was Thursday. Okay. Here's Friday. Okay, here's what I traded. I got in at 9:36, right here at the open of this candle. Sold at 9:38, which was close to the close of this candle, and I sold the rest here. And the reason I sold the rest here was because we had this doji candle. Now, doji doesn't mean that it's going to reverse. Doji means, hey, watch for a possible reverse. But I was up 30, I think it was 30 some percent on it, and I know kind of a lot of times you get a big pop in the morning and then a sell off, so I figured I'd just get out. But the reason I entered was we popped above the cloud here, and the green line crossed above the purple line. So that was my reasoning for entering that one. And I also traded Boeing puts at 9:42. Let's go back here. Boeing at 9:42 on Friday. Would have been right here. Puts. Yeah, this one I got stopped out of. This I was actually up close to 10%, and I had a sell order in for right about here at the low of the day, just before the low of the day, and it didn't quite hit it. I didn't have a sell order in to sell all of it. I had a sell order in to sell most of it, and it didn't trigger, so I stopped out. This candle here killed me on that trade because I waited till the candle closed, and it just really ate away at that loss. Really made that loss a lot bigger. You see, I paid $1.31 and I sold at 64 cents. So then at 10:10, I bought 5 Boeing calls at 50 cents at 10:10. So at 10:10, which was right about at the open of this candle, this here, when I was in Andrew Keene's chat room, one of the members there created this. There's a formula behind it. He made it, so I don't want to give out that formula. I really don't use this. I just have it there. But we had a big pop above here. The green line was above the red line, and I saw this buy signal, and I said it was a paper trade, so I was experimenting. I said, all right, let me try it here and see how high it goes. So I bought in the calls right at 10:10. I sold at 10:12 and 10:15. So I sold right at the open of this candle and right at the close of this candle. We see another doji here, and then we pull back. So I sold. I closed out of it there. And then I traded Roku. Paid $1.06. You see, I sold $1.34, $1.51, and $1.27. Roku puts at 12.37. ROKU puts, 1237. The reason I entered these puts was it broke down out of the bottom of the cloud, and we had this red sell flag here. Anytime you break below the cloud, it's usually a decent entry. So I entered right after the open of this candle, and I sold, what did I say, at 1250 something. 1240, 1258, and 151. So 1240, right in the middle of this candle. 1258 was close to the, right after the open of this candle, and 151 was over here when it popped above this purple line. So those are your setups. Those are some of the setups that you can use. Like I said, on puts, if the purple line crosses below the red line or the green line, that's an entry. Stop out when it closes back above the purple line. For calls, it's the opposite. We'll go back to Apple and look at that one again so I can show you. Calls, you see right here, the green crossed above the purple. This is a little bit riskier entry. And this is a good example. A little bit riskier entry because you're below the cloud. So technically you're still in a bearish trend, but you have the green crossing above the purple, so it's signaling an entry. And these are the indicators I have set on all my charts. It just shows you it's a bullish engulfing candle. This would have been a good entry because you have a bullish engulfing here, you have the green crossing above the purple. The thinner this cloud is, the weaker the support resistance is. This here would be pretty strong support resistance. This here, not so much, because it's easy to break through. Same with this. So you got your green crossing above the purple with a couple of bullish engulfing candles showing here. A safer entry would have been once this popped above the cloud, which is what this buy signal is indicating. A couple ways to play this. You can come up and anytime it pulls back to the green line, you can go ahead and add to it, or that would be an entry. Let's say you didn't enter back here, maybe you missed it, maybe you weren't sure, whatever. Pull back to the entry, or pull back to the green line, and you've got a bullish engulfing candle. That's a fairly safe entry there. Your stop out is if you come down and close below this purple line. So you could have entered here, could have rode this all the way up. Maybe here, maybe sell a little bit because you closed below the green line. Sell a little bit here, take a little bit off the table, and an exit would have been about here. I don't know if that quite closed below the purple line. If it did, you could have closed it out here, or rode it all the way to here and closed it out here. But that's the premise of the cloud. Anything above the cloud is considered a bullish trend. Below the cloud is considered a bearish trend. Above a green cloud is a little bit safer than above a red cloud, and the opposite is true for puts. Below a red cloud's better than below a green cloud. But these are the main lines that you want to use. I don't generally trade a pop above or below the clouds when I traded it. Not that they're not good trades. They're usually not quite as safe. Because if you look at a choppier day, look at the choppy day here. You close below the cloud. Yeah, you could have entered right here, but usually people wait till the candle closes and you enter, and guess what? You get pushed right back above it. So now you close out of it and you go long because you broke above it. So that's why choppy markets are tough. And you're going to have the same thing with the green and red crosses or green and purple crosses. The bigger thing is you got to try to distinguish what's going to be a trending day and what's going to be a choppy day. If it's a choppy day, you really don't want to use Ichimoku cloud to trade it. Maybe there's other people with more experience with the cloud than me that have found ways to trade choppy markets, but what I was taught and my experience, choppy markets and Ichimoku Cloud just don't play well together. Usually the best way to trade a choppy market is channels, trading channels, trading trend lines. Um, you have a channel. Let's just do a. Let's just ignore this chart that's up here. You have a chart. You have a channel here, and you get this down to here, down to here. You can go back and forth between the channels. Just trade between the channels all day long. Whether it's this type of channel or whether it's I shouldn't have drawn that many. Now I got to erase them all. I don't know if I do. Remove old drawings. Clear drawing set. See what that does. Okay. Same's true for a flat channel. On choppy days, you can trade a flat channel. You might have this all day long. This is the best way to trade choppy market. And choppy markets, I'm not saying that's a good thing to trade. I'm not saying, yeah, anytime you see a choppy market, trade this, because choppy markets are best just to avoid. They're very hard. Even trading channels, it's very hard to trade a choppy market because you don't know that it's going to come all the way up here. It just makes it a lot tougher. Oops. Clear drawing set. So, anyway, that's the crux of the Ichimoku Cloud. If you're interested, if you think it's something you might like, go ahead and do some more research on it. Boeing's been pretty choppy lately. Let's see how it looks. See, if you would have caught this, you would have been good, but it would have been hard to trade. You could have played this crossover, but you could have made money on it, but it would have been a lot harder. That's today. Same here last week. Let's take a look at Apple on the daily chart using the Ichimoku Cloud and see how much. I'm sure it looks a lot better on a daily chart because you have all these potential entries. Right here, the green crossed above the purple. You had an entry here. Green cross below the purple. You have puts entry. Green crosses back above it. Enter again. Here they kind of rode together for a little bit. You have the green popping above it again here. You have entries along the way. And like I said earlier, if let's say you miss the entry, right here you got to pull back down to the green line, or you could have waited here, got to pull back down to the purple line. You could have entered here. Your stop out is closed below the purple line. As long as you stay above the purple line, you're probably going to make money on it. Up here the line's kind of touched, but technically you'd still be in this trade from way back here in September, early September. So you're 3 months, you're still in the trade. And the other thing Ichimoku Cloud does, and I don't rely on this, so take it for whatever it's worth to you. Ichimoku Cloud is supposed to read 26 periods into the future. So on a daily chart, 26 days into the future, this is supposed to show you what is going to happen in the next 26 days. The trend is going to continue up. Do I buy into that? No. Because look what happened here. This is telling you in 26 days the trend's still going to be trending up, and look what happened. Sure, 26 days is way back here, but I still don't. The same premise would be over here. If you bought in right here because you're saying, oh, it's going to be up. Well, tomorrow it could start coming down and fall down through here. So I don't buy into this a whole lot. In fact, when I used to trade it, I used to go in. Where's it at? Come in here, time axis, expansion area. There was a way to cut this down. Maybe it's in the cloud. Maybe it's, let me see if it does it right here. Default's 26. Let me do that. Yeah. So you can change it there, just so you can see more of the chart on the screen. The default is 9 and 26. Since I don't use this as my main trading vehicle, I'm going to leave it default. But if you want to play around with it and change it, you can do that. Let's go back to this Chiku and add it back on and see if we see any correlation here. Yeah, like I said, I don't see where this Chiku really does anything for me. I think it's actually pronounced Kiku. I don't know. Either way, I don't see where it does anything for me. I don't see where it offered support or resistance anywhere. You could maybe argue, maybe a little bit of a case that right here, but it was actually the green line was holding, it was the support, not this Kiku. So to me, that red line, that Kiku line, is just one extra line that I don't need. So I get rid of it, leave it off of there. I'm sure you can set stops. Let's go in and take a look. I know this can be a long video, but I'd like to get all this into one video. This is today. I traded out, and I didn't use the Ichimoku for this. I was using something else I'm working on, in addition to my original style charts. Apple, $172. I lost 37% on ROKU. I made 37% on Apple, and made 21% on Nvidia. So, but let's go in and see. Let's pretend we're going to buy this. I just want to see, to set a stop. I'm pretty sure you can do this. Let's set that. Let's go 3-minute chart. Delete that one. Come up here. We want to click study. Ichimoku. Set that to 1 so it reads that'll make sure that it's the close of the previous candle. No, that's wrong. Let's do price close is less than, or you can do crosses below. Let's do is less than. Study Ichimoku. Tenkin period. So this would do the close of the previous candle is less than Ichimoku Tenkin. So yeah, you would put this to Tenkin, and this is something I would experiment with just to make sure. Your Tenkin line was, if you want it to be the Tenkin line or the Cajun line, whichever one you want it to be, you would set it, let's say Tenkin line, and you would set it here to what that number would be. So let's say the Tenkin line is the quicker line. So let's say that the Cajun period is the purple line, I believe. I believe the Cajun period is a purple line. And we can verify that over here. So let's say we want to stop out when we close below the Cajun line. So the previous candle price closes below the 20 or the Cajun line, it'll sell. So let's go back here and verify all that. So your Cajun line is this purple one. Yeah, purple. So your Cajun line's a purple. So with that, there would be a sell order set that when the price candle closed below this purple line, it would automatically stop out of your trade. So you could set that. This wouldn't be, maybe it wouldn't be a bad idea for swing trading or longer term. You could have made your entry here, set it, maybe set a stop, close below this purple line. Where'd my green line go? I think I got rid of the wrong line. Yeah, we don't want to get rid of this line. We want to get rid of this line. Okay. So you could have set it to stop out, close below this purple line. Look how long 3 months later, you'd still be in that trade and be up big. Boeing, not so pretty on Boeing. You would have got stopped out. You know, maybe you enter, let's say you enter here. Look what would happen. I don't like entering on cloud breaks when the cloud is pointing down, and that's what this is. You broke out of the cloud, but guess what? The cloud is pointing down, turning into a red cloud, so I wouldn't have entered there. Same with this one. Even though you could have made a little bit of money there, I don't like that. But again, choppy market. It's hard to trade Ichimoku, and I don't think anybody really would have wanted to be trading Boeing during this time with any type of chart, whether it's Ichimoku or anything else. Boeing just wasn't a friendly trade recently. Same thing with Nvidia. Yeah, you could have got in here and stopped out right here, but the nice thing about Ichimoku, you could have entered here, stopped out. You would have stopped out right here, but once the price pops back above the red line, which would have been here, you had a bullish engulfing. On this entry, I probably would have, even with this entry, I probably would have gave it more room. Now let's say I bought it here and I didn't give it more room, and I said, okay, I'm just going to set it and not look at it again. Yeah, I would have got stopped out here, but I would have known I got stopped out because I would have looked at my phone and saw the alert. So I keep looking and I see bullish engulfing. Oh, okay, let me go in and get in again. Well, now I'm down, I'm barely above this purple line, so I don't really want to set a stop for the purple line. Maybe I'll set a stop for here. And I could just set an alert for price level because I already know where this cloud's going to be because the cloud's 26 days ahead. So I look and I see 161.59-ish. So maybe I set an alert for 165.50. Actually 161, about 161. So I set an alert for 161. Because I'm going to be, if I'm playing this, I'm probably going to be trading, a month or so out. So it's not going to move that fast. But whatever, you get the idea. You can set your stop or set an alert for down here, somewhere down here. This is another thing that I kind of learned with Ichimoku. See this flat area here? Now you got to remember, even here, this cloud is here because you're 26 days ahead. Look how flat this is, and look at the purple line here, how flat that is. To me, I would think that's probably going to be fairly good support right there because you have this line and this line, as well as a little bit of resistance right in here. So maybe set an alert for right here. If it gets below here, take a look at it and see what you think. If you would have entered on this bullish engulfing, it wouldn't have came down and triggered that. Once you're safely above this green line, now maybe change your stop to close below the purple line. Or let's say you have 5 contracts. You could set a sell order, do an OCO. One cancels the other. I'm sure you guys know how to do that. I can go over it real quick. But say you want to sell 3 contracts when you get a close below the green line. Well, up here you would have sold 3 contracts. You're still holding 2. Once those 3 sell, it's going to cancel the order for your stop out. So you can have a stop out of all 5 below this purple line, or close 3 below the green line. So, and the difference is, you say, well, if it closes below the red line, it's obviously going to close below the green line, but maybe it's on different days, or maybe it's a candle that a big huge. Let's say this candle. Let's just say this candle closed below the red line. You wouldn't have got a chance to sell on a close below the green line because it's all one big candle. So it wouldn't have sold those for profit. So you want to have an OCO, so you're kind of covering yourself for something like this, the big red candle. To do an OCO order, and I really don't use them much, so I'm not gonna I'll have to walk through it here. You come down here, single order, OCO, you right click and create duplicate order if you're setting a stop or target. And then you come over here, set one of these to, you come in here and do, like I said, it has to be at market when you do this. come in, do your, we're doing a daily chart, let's just say it's daily. Add condition, price, close from 1 bar ago is less than study Ichimoku, and the Cajun is, yeah, let's do the Tenkin because we want to sell partial. You hit save, you hit OK down here, you hit save down here, you hit confirm and send. So now you have an order to sell, let's say 3 of your 5, if it closes below the green line. And then this one here, you're going to do stop on, you do the same thing. You come in here, you do I don't know this here, I'm not sure. That's something I'll have to play around with, because you normally do market, stop on market. Well, yeah, you could do the same thing. Stop, you do market. You wouldn't do stop, you do market, day chart, and you do the same thing, but price close is less than study Ichi, and this one you would change to Cajun 26. So your first order of your OCO, your first line of your OCO is going to be sell partial 3 of your 5 or whatever it may be when it closes below, when the price closes below your Tenkin line, which is 9 here, or sell all if price closes below the Cajun period. So this would be your stop out, and this would be a profit taking. Now once you sell partial, you're going to have to come back in and reset it, because you still have some left and you got to figure out what you're going to do with it. At that point, once I sold some and took profit, I'd probably set it for the rest of them, just set a stop. But that OCO, what it means, one cancels the other. Once this one triggers to sell below the green line, it's going to cancel the other orders. Now you have no stop for your other 2. So I would probably, my strategy would probably be to set a stop on a close below this, the red line, the Cajun line, for the rest of them, and just ride it out. But it's a good thing that you can use if you really don't want to watch the markets every day. But like I said, if you think you're interested in this, just do some more studying and research on it. I think it's a good tool. It's a great tool in a trending market. It's not a very good tool in a choppy market. You see that here. I mean, it's just trending, yeah, but it's not. You don't have that nice big green cloud like you show over here. You can still trade it, like you got a buy signal here, you would have stopped out. You got a sell signal here, you could have rode this all the way down for big profits. So it's just something, just another tool to have in your bag if you're interested in Ichimoku. Yeah, read up on it, learn it, try it, paper trade with it, play around with it, see what you think. If you like it, use it. If not, go back to what you used before. The thing I like about the Ichimoku is you really don't need all these indicators down here. You can throw another indicator on there. Let's just say stochastics, if I can type right. Let's just put a slow stochastic on here. Maybe I want to use a stochastic for, I hate that red. Maybe I want to use a slow stochastic just for verification purposes. There's no problem with doing that. Okay, you got a red sell signal here. What's going on? Both lines are coming down. Yeah, it's not a bad signal. Maybe go ahead and enter a short here. You can use this for reassurance or extra verification, whatever you want. But you don't really need any extra indicators with this. That's the one nice thing about Ichimoku. It's pretty much an all-in-one tool. So, and then, like I said, if you add in, bearish engulfing candle here, problem is you're pretty far away from the cloud. So I don't know if I'd use that one. I'd wait till we got closer to the cloud here. Now you got a bearish engulfing, although it's a small one. Another one here. That's actually a cloud break. It's not a bearish engulfing. You get a cloud break here with the sell signal here on this, and followed by a couple more bearish engulfings. That'd be a good entry. So anyway, it took up 35 minutes of your time, but I wanted to get that out there and wanted to try to do it all in one video. I'll put in the description that it's a long video, but it's worth the watch. Check it out. Like I said, I learned it from Andrew Keene. He had a trading service. I don't even know if he still does. This was years ago. He's been on CNBC several times. In fact, we joked with him before that he did a segment on CNBC sitting behind a desk. He was in front of a window in San Diego with a bunch of yachts behind him, and he was joking that he had shorts on. He had a suit and tie, suit jacket and a tie on. And he was joking he had flip flops and shorts on, and he was being honest. He said he was wearing flip flops and shorts underneath. He couldn't see it because his desk was there. But check him. Anything. I'm sure there's other stuff out on YouTube. I'm not going to tell you that I'm the only person that knows Ichimoku because there's other people that know it probably better than I do. But market's closed now. But yeah, go ahead and take a look at it and see what you think. Talk to you later. Thanks. Bye.